Hello and welcome to today's webinar. I'm Nick Zulovich, part of the team at Cherokee Media Group and senior editor of Prime Auto Finance News and AutoFin Journal. In today's webinar, digital customer engagement, what it is and why you need it, we're going to learn more from Preston Cecil, who is the Chief Operating Officer of Payix. But before we get started, just a couple of quick housekeeping items for today's webinar. We'll be in listen-only mode for our session today, and it's also being recorded. So we'll make that recording available to you as possible. So keep watch of a link and a message in your inbox coming as soon as possible so you can review the great information and share it with other people at your shop. If you have any immediate questions, we will reserve some time after Preston's presentation for a Q&A segment. Just use the chat function on the Zoom platform to submit your question. So with plenty of knowledge and recommendations to share, let's get right to Preston Cecil for our webinar. Preston, the floor is now yours.
Hey, thank you, Nick. Good afternoon, everyone. I'm excited to be here today. Thank you all for joining me as I can talk about something that I'm passionate about, and that's digital customer engagement, and really focus in today on what it is and why you need it in your organization. So with that said, I'd like to do kind of just a real quick overview on myself. I think it would help provide some context for the webinar today. So again, as Nick mentioned, I'm Preston Cecil. I'm the co-founder and COO here at Payix. And Payix is a fintech company. We offer white label borrower facing tools and real-time loan management system integration to really help lenders and loan servicers alike to improve their ability to engage with borrowers and collect payments. And so, that's what we do here, and that's what I've been working on for the last 5 years. But prior to my founding of Payix, and converting to that vendor side of lending, I actually ran a risk management group for a non-prime auto lender in Fort Worth. So my knowledge is really rooted deep in lending, specifically the data-driven side, the data-driven decision side making of the business. And while I was on the lending side, one of the larger projects that I actually got to lead was really around using data-driven collection strategies to maximize performance, specifically knowing which borrowers to contact, when to contact them, and really how often. And while we were really very good at kind of profiling our borrowers and predicting their behavior, one of the areas that I really just didn't contemplate, while I was on the lender side, was how to contact the borrower. Meaning really what method of delivery, I wanted to use to really engage that borrower. And it wasn't until we started Payix that I really realized, what seems so obvious now, is that you can really have a perfect profile of your customer. But if you're hamstrung by your means of engagement, your results, they're just going to fall short. And so today, I'd really like to share some of my learnings over the last, 5 years, and hopefully set you guys on a path to improving customer engagement and really using technology that's available today to do so with digital customer engagement. So first, let me just kind of broadly define customer engagement. It's simple. It's just the interaction between an organization, whether it's B2B or B2C, and its customer. So in lending, this simply converts to the interaction between the lender and the borrower. A classic, interaction in this setting might be a welcome letter, right? Or a welcome phone call post-loan origination. So, just kind of that back and forth between the lender and the borrower, and really providing that customer service. So now let's sort of add a layer of technology and really dive into digital customer engagement, or what I'll call DCE, moving forward for short. So first, let let me talk about some examples of what's not DCE, because I think a lot of times, lenders have some pretty sophisticated tools and technology, but they're really neglecting the borrower. So, payment coupon books, remember those, obviously something like that's not digital customer engagement, but neither is, automated welcome letters, right? These obviously are examples of customer engagement, and they can actually be fully automated and human intervention free, but they're not true digital engagement because they are not occurring between a lender and a borrower on a digital platform. What about your newest, web-driven, robust loan management system that you implemented last month? Nope, it's still not digital customer engagement. While it's extremely cool and it's, sophisticated and it helps streamline your internal operations, it's not an example of customer engagement. It's not facing your customers or your borrowers. What about accepting Bitcoins for loan repayment? Well, it may be forward thinking or perhaps a bit reckless, but, accepting payments in the form of digital currency is also not digital customer engagement. So what is digital customer engagement? Well, let's just reiterate our previous definition. Digital customer engagement is the interaction between an organization and its customer on a digital platform, or in lending, simply the interaction between a lender and a borrower on a digital platform. So let's look at some examples. In recent years, we've really seen an explosion of businesses implementing DCE and really utilizing, smartphones and mobile applications to connect with their customers. One of the more, prudent examples that I think we're all familiar with is mobile banking apps, which now constitute more than 60% of all banking. And as of 2018, actually outnumber online banking customers, something that Deloitte predicted would happen in, 2020, and it actually happened 2 years faster than predicted. And so, there's other examples on the front end area of the business. There's a company that I'm familiar with named Blinker out of Denver, Colorado, that can now facilitate 90% of the sale of a vehicle between two parties, or the refi of an auto loan, by simply taking a picture of the vehicle's license plate with the smartphone camera, and the remaining portion of the transaction is all done online. Now, these are very, very cool technologies, but they're not just cool, they're also in high demand. There was a survey done by American Well, and this was in 2019, so this was pre-COVID, that actually revealed that 2 out of every 3 American adults were willing to try telemedicine, or in other words, putting their health care, the most important thing they have, on a digital platform. Yet we, continue to see the non-bank lending vertical, moving slowly to adopt a true DCE. So I want to talk a little bit about what I call the DCE factor. As lenders, we are constantly trying to increase the ROA of our underlying portfolio. This is really driven by both the growth and revenue side of the equation, as well as that expense side, right? And even when you're isolating the expense side, we typically hyper-focus on credit losses, right? How do we reduce those credit losses? And I feel like it's all too often that I come across organizations, they have first-class operations when it comes to their internal technology. They really have, a strong data-driven decision culture, and they're proficient in their collections practices. However, they seriously neglect their borrowers' experience when it comes to customer engagement. And we as lenders, we become too dependent upon our risk management teams to engineer these front-end custom scoring models, or our collection managers, putting in strong KPIs to try and manage the floor, and making that 600 FICO perform like a 700 FICO, but without the benefit of the DCE factor. And that is an input to your ROA equation that is completely unrelated to originations or your internal collections practices, that can have a strong, positive relationship with your portfolio performance. In other words, DCE can give your portfolio performance a lift that is completely unrelated and uncorrelated to your data or your operations, meaning everyone, regardless of sophistication, can benefit from using digital customer engagement. So what are some of those benefits? The first one is, you're going to create stickiness with the customer, right? Having that strong DCE, it creates a brand loyalty to your organization, but it also creates a practical one just through ease of use. Most people, just for example, Amazon, right? They don't necessarily have a brand loyalty to Amazon. In fact, a lot of people, at least in my circle, they close their eyes and hold their nose when they're ordering from Amazon, but they do it anyways. And they do it because of the ease of use and the fact that, the DCE that Amazon lays out to their users is just very sticky. And so in lending, your organization can use that same DCE to both, increase the chance of your repeat borrowers and help drive more originations as well as customer referrals, just by having this loyalty or this stickiness factor. Next, obviously you're going to reduce operational expenses. Creating an easy to use digital customer experience, it's going to relieve the burden on your customer service teams. It's going to allow borrowers to perform activities and pull relevant loan information that's otherwise only available, through a request on a phone call. And so, by allowing the borrowers to more easily self-serve, it's going to reduce unnecessary phone calls and that time burden on your staff. And it's going to allow you as the lender to do more with less. There's no need to waste that valuable time that you have, in your working day performing activities that a borrower, they can do themselves. Let them self-serve with a good DCE. Number three, you're going to increase the borrower satisfaction. At the same time that, you're providing your borrowers with a digital customer engagement that reduces, not only your time drag, but also their time drag and unnecessary burden of having to pick up the phone and dial in and wait to talk to you. Ultimately, using DCE is going to, allow them to perform more loan inquiry activities. It's going to increase their level of transparency and perceived control. And really, that's ultimately going to increase their satisfaction and positive experience as your borrower. And happy borrowers tend to pay more than ones that are unhappy. And finally, ultimately, you're going to improve your financial performance. Anytime that you really, have a friction reduction between a lender and a borrower, meaning, more additional channels to connect, you're going to reduce delinquencies and ultimately default rates. And by utilizing a DCE with your borrowers, you'll be able to reduce the friction as really, as well as free up your customer service teams to focus more efforts on those already delinquent accounts. And, here at Payix, we've really seen dramatic reductions in loan charge-off rates with our lenders utilizing our DCE platform, while at the same time also reducing the overall cost to service an account. And this is especially true when we talk about that non-prime space or the subprime lending, if you will. And really, as a second derivative of that reduction in OpEx, your lender, you now had a reduction in credit losses, you had a reduction in, operational expenses. Now you can slightly pay a little bit more for better quality paper, which makes you more competitive and just further reduces future credit losses. And ultimately, you have that lower charge-off rate. Maybe you restructure a more cost-effective credit facility, and so it creates this sort of tornado effect, and all leading to that increased financial performance there. All right, so I want to dive in here for a second into the smartphone as part of the digital customer engagement, and really start with who's it applicable for? Well, the short answer is everyone. Period. Right. The smartphone, which not that long ago, very early in Payix's development, it was not long ago that it was still seen as more of a luxury item, but now it's as commonplace as a toothbrush. In In fact, I read that 96% of Americans now own a cell phone. 81% of that is a smartphone. And if you really hone in on the age range of 18 to 49, which is where the biggest chunk of your borrowers are going to be, smartphone ownership, it's in the mid 90s, 92 to 96%. So basically everyone. And what's even more eye-opening, and something that we've written about extensively here at Payix, is that a huge chunk of Americans, they're also what we would call smartphone dependent, meaning they do everything from shopping to applying for jobs to making their car payments, all from their smartphone. And you really have to put 3 exclamation points on that when it comes to 2 specific market segments. The first one being, one of what I am, which is millennials. We've grown up in a world where smartphones were pretty much available most of our adult life. And so we choose to operate on our phone, and we're very proficient at it. But one of the ones that's maybe not so intuitive is the lower income or the non-prime individuals. And again, they do everything from their smartphone because it's their only option typically. That is, these are the folks that they don't have traditional computer and Wi-Fi setups at home, and they really rely on their smartphone and their cell data to reach the internet. But how can a lender take advantage of that smartphone and the fact that it's in everyone's hands? They can really utilize mobile apps to create strong digital customer engagement by providing their customer service like access directly in the borrower's pocket. That is, you can literally use the technology available today to install a customer service team in their pocket on their phone 24/7 and provide them a DCE like never before. And so what are some of the things that you really enable through the smartphone? Well, the first one is just data information sharing, right? So kind of hearkening back to my earlier point around reducing unnecessary phone calls, lenders can use smartphone applications to share relevant data and documents with their borrowers, reducing that unnecessary inbound call volume and that friction between the lender and the borrower. Number 2, communication. So here at Payix, we help our lenders increase communication touch points by installing a native chat feature within the mobile experience. This enhances the DCE and really allows borrowers who are too busy to answer the phone, or frankly, they just don't want to talk to you, another means to communicate with the lender. And we find that having this additional outlet for communication has 3, main benefits. The first one is you're increasing your reach. So you're touching more borrowers in less time by giving more outlets for communication. You can chat, multiple borrowers at a time. But if your agents are tied down on a phone call, that's pretty one-to-one. Number 2, you're going to find those hard to reach borrowers, which are typically, your non-prime or your delinquent customers, the ones that you really want to talk to. These people, they don't like getting harassed on the phone. They don't like talking about how delinquent they are. It makes them feel bad. But they're more likely, in fact, they're very likely to respond to a chat message where they feel more in control of the conversation. And then finally, number 3, the millennial factor. Again, hearkening back to myself, we just prefer to message you and you message us and we'll get back with you. We're too busy to answer the phone, right? Life is in a pure ADD manner. So, but just as nonverbal communication is effectively the primary means in P2P interactions today, whether it's me texting my mom or my friends or, talking with coworkers in chat, we really believe the same holds true for business to consumers in the near future, that it will be the primary method of communication. And what's even better is the chat feature that we've installed here at Payix. It allows for either the borrower or the lender to open up the conversation. And so it's a true 2-way conversation. And so it further reduces those unnecessary inbound or outbound calls, allowing for further collection flow optimization. And then finally here, obviously something that's probably the most important of all, is providing a good DCE and using application technology on their smartphone. it really allows for easier transfer of money, right, from the borrower to the lender. So repaying the loan, or vice versa. One of the products that we have here at Payix, allowing a lender to fund a borrower, their origination proceeds. And the last thing you ever want to do is create hurdles for loan repayment, right? That a feature alone is going to increase your portfolio performance and ultimately reduce your loan delinquencies. All right, so the times that we're living in now, like most black swan events, jolts to our economy, they tend to fast forward the death of old technologies and ways of doing things, and they rush in a new era. The COVID-19 pandemic, has really been no different. It's forced lenders to learn to work with their borrowers in a digital age, using digital customer engagement and meet their borrowers wherever, whenever, and however they want to be met. Here at Payix, we saw a surge in interest in our platform, following those mandatory shutdowns by most of the nation's states back in March of this year. And these lenders, they knew they needed a DCE to deploy, and they had to do it in short order to maintain their operations while their collections floors were literally dismantled, right? You had to get everyone out of office. And in working with many of these lenders, we were able to mitigate that initial plunge in loan repayments and spike in delinquency. And we're actually able to get these lenders back to baseline or even better in less than 30 days. And a lot of these lenders are seeing, as they grow into the back half of this year, that they're not needing to hire the ways that they were before. They're not needing to reinvest in people technology because the digital engagement is really, taking a huge chunk of that off of their floors. And so, it's hard to really make a call on a new normal as of now. But we definitely see that lenders utilizing our digital customer experience platform, our Dce platform, they've increased their portfolio performance and they've had extremely high rates of borrower adoption and utilization, and they're fully experiencing that Dce factor. They're getting the benefits. And so just some kind of final thoughts, obviously customer engagement, it's been a core tenet to the lending cycle for decades, and we really continue to, we see that continuing forward for perpetuity, but it's going to be in a more digital way. And so whether you believe in that new normal or you think things will eventually go back to the way they were pre-COVID-19, your organization can really benefit, ditch the horse and buggy methods, and adopt a digital customer engagement. So with that said, Nick, I'll turn it back over to you.
Great presentation again from our special guest for today's webinar. That's Preston Cecil, who is the co-founder and chief operating officer at Payix, for our session today titled Digital Customer Engagement, What It Is and Why You Need It. And just a reminder that we are recording today's webinar, so keep watch of your inbox for a message containing a link to that recording coming to you as soon as possible. And if you have a question for Preston, you can use the chat function here on the Zoom platform. And to get our conversation started, Preston, certainly there's been a lot of investment recently in chat bots and online negotiators and some really high-end technology pathways. How do you see AI, artificial intelligence, perhaps taking over customer engagement, or will its momentum kind of stall out a little bit? How do you see one of the buzzwords of the day, so to speak, artificial intelligence playing a role?
Sure. Yeah, no, that's a great question, Nick. And, to be honest, I think, artificial intelligence or AI, it has quite a long way to go before it's going to replace a lot of the customer service functions, that we as people are supporting today. And to be honest, I don't think it's an end all be all. Even if you fast forward, many years, I actually think there's going to be a complementary feature and something that, we've been looking more into lately, which is this concept of social customer service. That is, it's companies that are going to use, their current or their former customers or borrowers in this case, to create and maintain sort of a help section, right? Or live blogs within the organization online. You see this today with tech companies, like Microsoft or Apple user forums. I believe those kinds of concepts, they're going to continue to expand, and they're going to reach other verticals like lending and, smaller companies. But AI has a long way to go, but I don't think, when it comes to the very end, I don't think it's gonna make up 100% of that pie.
The voice you're hearing is our special guest for today's webinar. That's Preston Cecil, who is the Chief Operating Officer and co-founder of Payix. For our session today, the digital customer engagement, what it is and why you need it. And during your presentation, Preston, you referenced the potential effectiveness of texting, especially as a great means of communication to reach those hard to locate contract holders and borrowers. If you could give a couple moments to revisit why texting is so effective with that particular customer segment, and why it can be a great pathway for finance companies and other lenders to reach their customers.
Sure. Yeah, and I think it's important here to just quickly bifurcate. So, in the presentation, what I was referencing was really more of the native chat feature, which is something that is different than texting. Texting, which is really just open up to any person or business can text any other person, I think that's gone by the way of email, or it's in the early stages of that, and that it's getting so cluttered, with junk or with advertising, that your message as a lender sending that to your borrower, it gets lost in the noise. I really think the better option is to have that native chat that's tied to your company's mobile app. It's something that's really held tried and true. Companies like LinkedIn or Instagram, most banking apps, they have this native chat. And it's the approach that we've really taken here at Payix. We try to offer this to all of our lenders. And I really do believe that is, that having that native notification on your phone is a much stronger, touch point than just general texting. So.
Again, that's our special guest, Preston Cecil. He's the Chief Operating Officer and co-founder at Payix. Again, his contact information and the company website is there on the screen. And one more question, Preston, to round us out that's come in. Another element to the mobile world that so many of us use is social media. And how do you see social media playing a role or a part in DCE, the digital customer engagements? So many social media platforms out there nowadays. How do you see that playing in the role?
Yeah, no, that's a great question. And obviously social media is where a lot of folks get most of their news now, right? It's where they get most of their information and recommendations. And, so honestly, hearkening back to kind of the four key benefits of having a DCE platform, the first one being that stickiness factor. If you have a good digital customer engagement and you make your borrowers happy and you support them in a positive way, that can go, viral, quote unquote, on social media. And people can really talk about how awesome it is to work with your lending organization, how great their experience was and the ease of working to repay the loan and the money that they borrowed. And so I see it more as a support function for sort of the marketing and the front end lead generation of new borrowers. But at the same time, there's other avenues, kind of talking back to my earlier point when you asked the question about chatbots and online negotiators is, social media can be a place where borrowers meet each other to really help each other learn about, a help section, right, on how to use your platform, or, how to better maximize their experience or troubleshoot any issues they may be having on the DCE platform that you're providing your borrowers today. But yeah, that's a great question.
That's Preston Cecil, who is the Chief Operating Officer and co-founder of Payix, our special guest for today's webinar, Digital Customer Engagement, what it is and why you need it. And Preston's direct contact information is there on the screen, as well as the company's website. And to out today, Preston, just any closing thoughts about the tumultuous year that's been for 2020? Any head toward the new year? Just how companies can approach digital engagements either so far this year or looking ahead toward the new year. Just any closing thoughts you'd like to round us out?
Yeah, and as I, obviously thought through this presentation, one of the things you try not to do is scare lenders into thinking they're behind. You're not trying to scare them into working with your organization. But what I will say is, it's not too late. It's never too late to start. At Payix here, we've seen lenders go from just storefront lending, people coming in the store to pay loans. And literally, within 3 months, they're doing their originations, through e-commerce, and they're taking their loan payments, over a mobile app, and 90% of the experience is converted to that in-person interaction. And now those lenders are utilizing, their borrowers are utilizing the DCE that their lenders are offering back to them. And you're not too small to feel like it adds value. You're never too big, to turn the Titanic around. Whoever you are, wherever you are, you need to always be thinking about customer engagement and really digitalizing it. And if you're interested, obviously Payix is here to help. And, we encourage you to reach out and just have a conversation with us and see what we can do.
That's Preston Cecil, Chief Operating Officer and co-founder of Payix. Preston, thank you so much for the great presentation. Certainly all the best to you and family, friends, and the rest of the teammates at Payix to remain safe and healthy.
Thanks, Nick. Same back to you and the auto finance team. Appreciate it.
And thank you so much for joining us on behalf of all of us at Cherokee Media Group. I'm Nick Zulovich. We thank you for joining us, and we look forward to having you again next time.